Welcome to The Explainer. Today, we're digging into the really complex case of Atmastco Limited, a company that is sending some seriously mixed signals. Honestly, it's a fascinating story of huge ambition clashing with some pretty major warning signs.
So on the one hand, the company kicked off 2025 with a total bang, announcing these massive new contracts worth over 183 crore rupees. You see a number like that and you think, wow, okay, this company is really going places. But, and this is a big but, here's where it all gets complicated. At the very same time they were announcing these huge wins, their financial results were telling a completely different story. For the half year ending in March 2025, their net profit was literally cut in half. A 50% drop. That's not something you can just sweep under the rug.
So what is it? A booming growth story or a serious cautionary tale? That's the big question here, right? To figure this out, we've really got to break down the two totally conflicting stories of Atmastco. Okay, so first, a little background. Atmastco wasn't always this big engineering firm. They actually started out simply trading steel products. But over time, they evolved into what's called an engineering, procurement, and construction, or EPC company. And this evolution, well, it's a huge part of understanding their ambitions.
All right, let's put on our optimist hats for a minute and build the case for growth. This is the bull story. All the reasons why someone might look at this company and just see massive potential.
And that optimism really starts right here. I mean, these aren't just any contracts. In March 2025, they locked in a 128 crore rupee project with a giant like Hindustan Zinc. The month before that, a 55 crore rupee order from the HPCL Rajasthan refinery. Look, when you're landing deals with clients of this caliber, it tells you you've got some serious momentum and that the industry trusts you.
But the growth story isn't just about their main business. Oh no. Atmastco is also making a really strategic and frankly ambitious pivot into a super high-growth futuristic sector, defense. And this move isn't just talk, it's real. Through their subsidiary, Atmastco Defense Systems, the company is already acting. The manufacturing unit is built, they have the licenses to produce military-grade gear, and they're expecting trial production to start by July 2025. This could be a whole new, powerful way for them to make money.
And it looks like investors are buying this story. Through 2025, the company either raised or got the green light to raise over 158 crore rupees. That's some serious cash. And it's basically the market saying, yeah, we believe in what you're doing.
And finally, from a pure numbers perspective, there's one more argument for the bulls. The company's price-to-earnings ratio, which is just a common way to see if a stock is cheap or expensive, is sitting at the very bottom of its industry's range. So, if you're an optimist, you're looking at that and thinking, hey, this thing could be a bargain with a ton of room to grow.
Okay, but that's only half the story. Now we need to flip the coin over because this is where things get a lot more concerning. This is the bear story. The biggest problem, by far, is profitability. In just 6 months, their net profit margin, which is basically how much profit they make for every rupee in sales, absolutely collapsed. It fell from a pretty healthy 10% all the way down to just 3%. That's not a dip, that's falling off a cliff. It tells you something is fundamentally broken in how they turn sales into actual cash.
And this financial nosedive is happening right alongside a massive red flag from credit rating agencies. And that red flag? A consistent failure to communicate. That is a very, very bad sign. So get this, both India Ratings and Carriage downgraded Atmastco. And the reason wasn't just bad numbers. The reason was, and I quote, issuer not cooperating. That means they were downgraded because the company just wouldn't give them the information they needed. For anyone watching, that raises a huge question about transparency. What exactly are they trying to hide? So while profits are cratering, debt is steadily climbing. Their total borrowings went from 52 crore in 2022 to 80 crore by late 2024. You know, profits going down while debt goes up? That is a classic recipe for disaster. And you can just see how quickly the bad news piled up. March, the first downgrade. May, the awful financial results come out. June, the second downgrade. And then in July, maybe the most worrying thing of all, but the company secretary and the internal auditor resigned. These are the people whose job it is to keep things straight. When they both walk out the door around the same time, that is a huge, flashing red light. So, how do we make sense of all this? We've got a company that seems to be living in two completely different realities at the exact same time. Let's just lay it all out side by side. The bull case is all about the future.
Amazing new contracts, a smart move into defense, raising money successfully. But the bear case is about the scary present. Profits that have vanished, debt that's piling up, and a really concerning lack of transparency. It's like looking at two different companies, isn't it?
So that brings us to the key takeaway. What are you supposed to make of a picture that's this conflicted?
Well, Atmastco is a perfect example of what people in finance call a special situation. You've got this fundamental conflict between their operational story, which is great, they're winning new business, and their financial and governance reality, which is not so great. The core tension here is the exciting promise of the future versus the very real, very tangible risks of right now.
And that leaves us with one final big question. When a company's vision for the future seems so bright and compelling, how much importance should you give to all the flashing red lights of its present? That is the puzzle of Atmastco, and there is no easy answer.